fire right where you can figure it out, or you doing the fire, but you still working part-time. You need supplementary money so that your actual support is not trying to so point dates off, what I said, then only you can ask what's the best.
I gave myself a time.
Yeah, you said I think the real open house might be right.
Yeah, I've taken it multiple times and I've failed.
Okay, ready to start them off?
Okay, so that's gonna end that portion of the presentation. I think you have the slides too for that. So if you guys want, just reach out to us and you can get the slides off of ri.com. Yeah. And then you can always reach out to us if you want to discuss, smart goals or whatnot. But we're gonna start the Facebook Live and then we're gonna start the presentation for the Braddahs now. Yeah. If you can, if anybody responds. Ready to start?
Oh, I know, I was trying to do all this.
Okay, here we go. Thank you everyone for coming to this portion. This is episode 23 of the Real Estate Braddahs. We've been doing this for almost 2 years now. It's a monthly. It started off as a virtual webinar, then it's been
People thought we didn't exist.
yeah, so then we
thought
changed
lived
it.
on the mainland,
So then the last 3, I think we've been doing live here at the Keller Williams office, but it's probably going to evolve. Next month we might choose another venue and a different route to go, but we'll be there for sure. So if a lot of new faces I see, so if you don't know, my name is Dean. As we mentioned earlier, I was a CPA, an accountant by education for the last 18 years. I got into real estate investing and sales, and really found that to be more of my passion. So if you folks are not aware too, hopefully the people online are, is we have a monthly drawing. We've had monthly drawings every for the last 20, started from the beginning, right? So if you participate, share, if you like our content, we ask you to share, to put comments in on or Facebook Live on my account. And in doing so, it enters you into our monthly drawing for our Amazon gift card of $20. So this past month, the winner is Myron. So Myron, if you're there, if you're listening this month, thank you for your input. And so to start off this month, as usual, talk about Wahoo real estate statistics. Starting with December 2019. So December information came out already. And if just remember, it's December 19 compared to December of the prior year. So it's a very interesting month. So for single family, you see sales went up 4% at 820,000. And we also had median condo prices also go up almost 7%, and they're at 425.5. Yeah. Another pretty strong sign for the sellers was that closed sales went up 19% for single family, with 309 closed sales in December. And for condos, we had a slight decrease of almost 3% at 428 closed sales. Median days on market, we saw a real 40% reduction, or it got from 30 days, it went to 18 days, days on market for single family. So basically from the point that the property was listed to the point that it went into escrow, it was only 18 days. That's really short. For condos, we were at 30 days on market and it's for a 20% reduction, or 5 days slower. Yeah. So what does that mean? Like, if you're just summarize that whole thing up, so I was thinking, how could I do it? After we talk about all those numbers, what is a quick way to summarize it? So I said, okay, well, who is the winner then for December 19? Was it the buyers or the sellers? So in my eyes, I think it's definitely the sellers, because both sales prices for the single family and the condos went up, and that the big one to me was closed sales jumped up a lot for single family, and days on market went from 30 days to 18 days. So that's a real big reduction. So that transitions me to what I want to, getting a little cultural now for the Hawaii people. I don't know if you folks are aware, but I believe the stat was 1/3 of the population are either full or have Chinese blood in them in the state of Hawaii. So point being that there's a strong presence of Chinese. So this January 25th is actually Chinese New Year this year. Last year was on February 5th. The reason why it's different because it's on the lunar calendar. So it's run by the full moons of the New Year's. So just a little information, this year is the year of the rat. And even though if your year of the rat, it's actually a bad luck year for you, it's not a good luck year because the Chinese believe that when your year comes around, then you're reborn again. And when you're reborn, when you're young, that's when you can get taken over by demons. So in the next few weeks, in the month of January, there'll be a lot of cultural events going on, Oahu, including Chinese lion dance, which is a way the Chinese believe chases away evil. It brings good luck. Doesn't chase away evil. It brings good luck. So what you do is you feed the lion VC or Chinese money, and that will get them to stay around you longer, and that will bring you more good luck. So just in case people aren't wondering what's that loud noise, the drums and the fireworks and these lion paper mache
His
things.
day job is that he does lion dance.
Yeah, my son is actually part of a club, so this is like our busy time.
How much do they is the pricing?
So actually they have a lot of for weddings or first birthdays. I think our standard rates are $175 for one big lion, and then if you want multiple lions, the prices get cheaper.
You get children, right? In the back. You don't pay up.
No, we have adult lions and we have baby lions too. It's for fun. It's not for profit. But yeah, if you have more information of where the performances are going to be or anything like that, or just culture, just reach out to me. Just wanted to throw in a little cultural tidbit in there. I might have done that last year. Here's another one for the Oahu people. For all you DIYers or flippers on island, I wanted to do a connection. So I have an acquaintance that has 1,400 square feet of coa laminate flooring that he bought for $5, almost $6 a square foot from I think it's Bougainville, but it was installed and they didn't care for it, so he had it all removed and it's just sitting there, and he put something else in. So they're offering it for $3 a square foot. If anybody is interested, let me know. I can get you the details, pictures, and the make model.
Send it to my friend, he's a flooring guy.
Oh, okay.
So take some pictures.
Yeah, I can give you more information. You can see the prices, but that's just reaching out there. Part of this whole thing is networking, right? So this is the local Hawaii side networking. I figured I'd try to help that person out. So one thing that us realtors hear a lot about are association fees for townhouses and condos, and a lot of feedback I get from both investors and homeowners are, oh yeah, no, I don't want to live in a townhouse or a condo because you gotta pay those association fees, right? And it's just like it's throwing away money. So I kind of wanted to say that, when they tell me that you're not getting any value, that's not necessarily true, right? Because a lot of times it could be you'll be paying these fees and you'll be getting like structural insurance, right? So to replacement insurance for the structure. If you have your own single family home, you're gonna have to pay insurance on that on your own, right? So that you also have amenities, right? Some of them townhouses or condos have pools, barbecues, business centers, security. So all of that is coming out of the fees. Also, a big one I think that a lot of people overlook is that you're paying these fees, and the association is banking your money theoretically for these future deferred repairs and costs. So things like elevators, repairs and maintenance, or replacement, redoing the roof, painting of the structure, or resurfacing the parking lot area. All of those cost a lot of money. I mean, like single family homeowners, like to paint 2-story house, it's probably, you're talking like $5,000 at least, right? And then you talk about roofing, you could be in the 10, 15, $20,000 for a new roof, depending on if you have to remove a layer and put another layer of shingles on. So the point is, you do get some value, but there is also a counterpoint where you're not getting a dollar for dollar benefit for your association fees, right? Because it costs money to run the association. So the association is paying a property management company to take they're going to be running a lot of it too. So they take a portion. So it's not a dollar for dollar value. But I guess point being is that you do get some value for the association fee. So something to be considered when you're buying looking for a new home or investment, right? Because for me, if I'm looking for an investment, that association fee could be high or low, something just like real property taxes in the different states. I'm more concerned with the bottom line. Yeah.
I'm very against homeowner HOAs. And the way you gotta look at, just run your numbers like how Dean says, like you have to like take your top line or rental income minus your HOAs. If your income is 2,000, so that's your rent, minus $500, which is usually what, $1 to $2 for like square foot usually, right?
Mm.
So you take that, so your real revenue is 1,500, and that's if you go off. I hear it all the time, and I bite my tongue. That's why I have these kind of meetings, so I can say what's really legit, how investors really do it. But you hear it all the time. People are like, "Oh, my property rented for $2,000," but they don't talk about the HOAs, right? And then of course, after the $1,500 is for the true income, then you do your rent to value ratio analysis divided by the purchase price, and you should figure that out.
But that's why the rent to value ratio, you can be shooting for that 1% or whatever, and it may or may not come out, right? To your point, and that's why that'll hit someone who's just looking at that rent to value ratio and then not running the deeper numbers, because things like the HOA fees or even like real property taxes per state, it's so different.
Even after the numbers work out, the problem with HOAs is that, like Hatin's saying, you got like a little pseudo government running this stuff, and it's never someone legit. It's somebody who's voluntold to do it or whatever.
Or people the homeowners who get angry and then they say, "Oh, why are my fees going up? I'm gonna get on that board." Something that does too.
And it's always mismanaged, and they always undervalue their CapEx. So when the big expense happens, that's when they cleaned out. So in my opinion, and then as an investor, you don't get to have say in a lot of things. So they could say, "Oh no, Dean, you cannot rent out your property."
All right, CCR and house rules and stuff too. Yeah. There are limitations for that too. Yeah, good point. I think that's all I have to say for my portion. And I think Glenn here.
So if you guys don't know who I am, I run a podcast, Simple Passive Cash Flow. You can find it at simplepassivecashflow.com. It's a lot of free investing information, like the rent to value ratio. I have analyzers on there, all free. There's nothing for sale after this thing. This is all just a reason for Dean and I to hang out for a little bit every once in a while. So I'm part of a collective genius mastermind that we meet up 4 times a year. A guy from John Burns came around, which is a big data house. And the question was, well, where is everybody moving towards? It's all the southern states. So I was kind of sitting in, and I kind of talked about this. I took this picture right here. Other headlines, I'm going to go through a lot of headlines here really quickly, because that's just how I do things. Not all the information is legit, and that's why I'm here to kind of give a little commentary alongside of it. But if you guys have any questions, feel free to interrupt, and we'll talk about it. This stuff is always a discussion. The whole point is to take all this. The world has so much information out there and a lot of fake news, right? But what is it that's going to guide us towards the right movements as an investor? But this is from Google keywords. What you can do is you can figure out what people are searching for. So I look at this once a year, and I just just for like hobby, I go look for recession, the word recession. Obviously, everybody was talking about it in 2008, but then recently, I don't know what that flip was, the late last year, right?
Was that the Fed chair?
I don't
They
know.
reduced it.
10-year anniversary,
Yeah, I mean, you know, a lot of technical experts will always be like, 8, this is the 8, this is the 10th, 12th, right? And you can never go off of numbers. Typically, 8 to 12 years is your average market cycle. But I think as of a few months ago, every day you wake up is the longest bull market.
Oh
Since
yeah.
forever.
I mean,
Yeah.
I think the market's at record highs today, right? After the Iranian threat kind of got simmered down, it's not really big. That's what's tripping me out.
So I always urge people to like look at other markets these days, like 2000 and when we met 2015-ish,
Really?
we were looking at like turnkey rentals and stuff like that. You were buying in Kansas City.
I was buying in Milwaukee.
I was doing Birmingham, Atlanta, Indianapolis, because that's where you can find the rent to value ratios available to cash flow. Because I don't invest in anything if it doesn't cash flow. So, but problem is like places like Memphis, Kansas City, Indianapolis, Little Rock's more of a tertiary market, but these perennial markets you hear about all the time. Well, guess what? It's 5 years later, and even that doesn't really cash flow these days. So you got to kind of go to look at places, more tertiary markets, they call them.
Further out.
So for example, like a Pensacola might be one of them, or Huntsville might be one of them. And this is kind of this last list of top 5 markets for multifamily rental.
Oh, Las Vegas? Oh, that's not a tertiary, just saying Las Vegas is top.
Yeah, top 4. But I don't like Las Vegas at all. I know you got a property in Las Vegas, but Las Vegas is where all the California money goes to run away from California.
And
I don't chase unsophisticated money. Here's a commercial property. It's for assisted living. Everybody's interested in that space. It's definitely up and coming. But you know, the old people, you know, they can have their own beliefs or whatever, but they kind of cluster in like certain races or where they came from. Whether it's right or wrong, that's what they do. But this is like the first LGBTQ.
Oh, and senior
housing. Interesting, right?
Yeah, that's neat.
Yeah, because so I invested in like a assisted living development, and it's built in pods. And the vision was like, oh, this pod is gonna have like Mexican food, this ethnic food. You know, we're not gonna tell them where they're gonna live. People decide. But I mean, this is how old people want to live, for a good bunch of them with a lot of money. I'll look at different like articles like this. Like again, these are a couple of tertiary markets that I look at. Arkansas, and Huntsville. You know, these are you got to look where the job growth is going. It's not in the northern states. It's not really in Hawaii. In fact,
Where everyone's coming to.
yeah, it's all the southern states, all the warmer states. But these are real jobs. One mistake I see a lot of people is like, oh, did you hear that Amazon fulfillment center is going there? Well, yeah, what is that going to be, like 50 jobs? Like that's nothing. It's just an all warehouse.
One of my first mistakes was, or not first mistake, my learning experience. One of investment I purchased, similarly back probably before I met you, as I went online and I looked for, you know, googling real estate cash flowing states, and I found Illinois was good. This news report, like you said, there's. So anyway, I reached out and I actually ended up picking up a property there as a short sale, and it's currently still doing well for me. However, I think a lot of stats that Lane's been pulling in recently and we've seeing is like, you know, like the U-Haul trucks stats and all that. It's like everyone's kind of immigrating out of Chicago, out of Illinois because the laws, the taxes are kind of high. I think that the Illinois and Chicago, their governments are not doing so well, so they're bumping up taxes. And then actually, Chicago and Illinois are not very tenant-friendly states. So that purchase, I mean, I still have it and it's doing well, but in retrospect, doing all this macro analysis, then maybe I would have thought twice. But like I said, it's doing well, and the analysis you do at this macro level, you still got to take it with a grain of salt, right? Because there may be some kind of competitive advantage you might have in a certain area that stats might not show strongly for, right? The competitive advantage. That's
But it's hard when you're living in Hawaii. Yeah. You're taking pawn shots over the Pacific Ocean. You don't know anybody. This is the best you have to work with. And I would just say, and we didn't have it initially when we started, is this network of other people you can connect with that are actually doing the thing.
Yeah. Then you can.
I have a question.
Yeah.
Because I'm purposely networking with our military because they basically are from all over the world. The more I talk to like military families that are like coming in and out of Hawaii, I'm an interested investor. They're like, oh, well, I have a property tax of 80,000. So kind of good strategy. Because like that's been my strategy the last 3 years. Because my ex-husband was military. That's how I landed here. But to target, like I'm purposely looking for places in military-friendly zones.
I think that's a good strategy. I think that's a good strategy. I mean,
I was trying to set myself away from like other ones. I was like, I'm targeting this demographic of people. So.
I think, well, if you have a competitive advantage over others and you enjoy what you're doing and you see that as a way that might pay off, I think that it's a good strategy. Are you talking about as a real?
As an investor and
okay.
Because people are always leaving islands.
Right.
You know what I mean? And it's like, well, I have a property back home, but I'm stationed here for a while. Do I get rid of it? Do I keep it as passive income or rental, Airbnb?
Yeah. And
that's when the conversation begins. It's like, hey, I'm an investor. You want to get rid of that? Let me help you. I know people that can help you. So I'm like, hey, what is the market out there? How much does the price cost? Because I don't know. I mean, when my ex-boyfriend was military, I was all over the world. I was Chicago, San Diego, San Antonio. I've been everywhere. So I kind of knew this whole physically being there. But some of my friends that are military here, they're like from North Carolina, Florida, all that stuff. So the places I don't know physically, I know through contacts here.
Yeah, so that's good. I mean,
I'm just wondering, like, has people done that here?
Yep.
And like,
yep.
Is it a strategy you guys use?
I don't personally use it specifically that way, but yeah, I think that's
I think it's better than nothing. I mean, at least you have a thesis, right? Like that's what investing is. You're gambling, but it's not like Las Vegas where you're probably gonna lose your money.
The odds are again not.
Investing is gambling, but most times you're going to win out and make money. It's essentially what this all is.
Sometimes when I'm in Vegas, I play poker. So I purposely sit at the poker table just to hear people's conversation. And when they say real estate, that's when I chime in. So I kind of like purposely integrate into like a male environment. I could be the only female that talks about real estate.
I mean, addressing your question about the military, personally, I don't go after military because the military is a stimulus of money helicoptered into one area. At any point, things can change.
Yeah.
The investment thesis I'm going to go after, blue collar workers. That's what I call it. And we might differ. I mean, but as long as you have a thesis and you stick to it, that's what I think is important. Everybody has a different investment philosophy.
Yeah, because the people I work with right now, they're getting out of the military. So they like put in their time, they're about to retire. So they want to try to invest, their continuous income, but they wanted to keep making money. So they put their 20 years in. But they're like, what do I do now? I don't want to go back to like blue collar work. I want to just.
I think that's one good sphere to work.
Yeah, but Dean mentioned the U-Haul report. You guys can Google that and see what that is. But like U-Haul is like the cheapskate smoothing, right? The do-it-yourselfers. I would probably go out on a limb and say that's the blue-collar where they're going. The van lines, if you guys are familiar with van lines, those are like if you're a white-collar worker, you get located across the country, everything gets put into a container for you and white glove treatment, and that has different data, right?
But okay, and to your point, so we're talking about like, so for your avatar or your
my investment thesis is I want to go after middle class working workforce.
Okay, so like you said, you're deeming U-Haul as like not in that class, that demographics. Oh, okay, so you would use it.
I don't really look at the van haul too. It's the U-Haul.
Right.
Van
So it
lines.
would be because that's shows your tenant immigration, where the tenants are immigrating, right?
Like I'm not looking where.
But he's talking something different though, right? He's talking syndication. I don't know if she knows.
Well, apartments and single family population growth, job growth, those are what I see as the two drivers. I mean, military student housings are like such a niche that people do go after. Not a bad strategy, but
Yeah, it was my target audience. I was trying to attract people getting out, looking for a way to make extra money, and their life doesn't work. So it's like it's mostly male. So I was trying to figure out how they can make more money for 6 kids.
I think that's a legitimate trend.
so do you guys know Fannie Mae, Freddie Mac? They are government. They used to be private organizations, but recently in the recession, the government bought them out, and they've been pseudo-government agencies financing pretty much all our debt in primary residences. Whether you go to Chase Bank, Bank of Hawaii, wherever, it's all backed by Fannie Mae, Freddie Mac, essentially, unless you're a subprime borrower. So there's always these talks about, well, when is Fannie Mae, Freddie Mac going to go back to being private entities? Now there's some talks about it going in like the year 2021, 2022. And it feels weird saying that.
Not that far away.
But I'm not concerned about it at all. I think people are like, oh my God, like I won't be able to get a loan because there won't be any Fannie Mae, Freddie Mac. I wouldn't worry one bit. Yeah.
Well, I mean, after subprime, it got so tight, the lending requirements, and then now we're just talking about how they're loosening it up.
Yeah.
Slowly by slowly. It's very cyclical, right? Everything is cyclical.
But people are like, oh, it's the top of the market. It's going to go crashing down. But like, it's still really hard for people who have bad credit to get a home loan. It's hard. It's hard for even people with good jobs to get a home loan. So I think that's a good thing. Looking at, so here are some new builds of multifamily apartments, something I key in on because that's workforce. It's not like high-end stuff. So it's like middle America. That's why I key in on these statistics. And I invest in apartments. So what they're saying here in this one is that there are always new properties being built, but they're Class A properties, the luxury properties being built. And it's been pretty much in this consistent band. So it's not like there's all this new inventory coming online. It's consistent. And I would say it's replacing the old stuff at a pretty good rate.
It's evident here on Oahu too, right? That's where the margins are for the developers.
U.S. jobs gain surprisingly solid in October. So the orange is the unemployment rate. It's very rare that you have a job or don't have a job these days. Everybody's working for the most part. And then, so Phoenix is another market that I've been kind of looking at lately, but it's traditionally a very hot cyclical market where it goes up and down, up and down, up and down. So maybe we can go over the highlights of this. So Yari Matrix is a commercial real estate news source, so I key in on what they say a lot. So here's some of their takeaways for the year and the quarter. So the GDP growth in Q3 was okay, 1.9%. And everything I read, whether from Yardi or everybody else, everybody's kind of quoting between 1.9 and 2.5 as like the forecast for the next few quarters, which is growth. Right? That's anywhere from 2 to 3% is usually normal. You're saying U.S. oil production is keeping inflation low. Correct me if I'm wrong here. So America is making a lot more domestic production of oil. And I'm not going to say the F word here.
But that's what's causing it. I think I heard on CNN today that it's because of that they're now the biggest.
I don't know, man. That could just be fake news, right? That's against the F word.
Say some people
fracking.
Yeah.
fracking. But it may just be like, environmentalists against that type of method.
Right, because even after the missiles, right, the Iranian missiles, I was expecting oil prices to change because my understanding is that the whole, we have our own production, but we use it, but we also export it too.
Right.
So it's like one big.
Yeah. So I invested late in December into a little oil deal to play around with it. And the nice thing about oil and gas investments is that you get these things called ITCs, intangible drilling costs. Google it. But the government wants you to invest in oil and gas because we can get.
Is that the 5-year play or your GP for one?
Yeah. So they put you on the GP and then they give you off so they can give you the bonus depreciation. So doctors love this kind of stuff because you get a lot of passive losses from big deals, but a lot of times you can't like take it to offset active income. So unless it's oil and gas investments, because of a special exemption that the United States government has incentivized you for you to invest in that. Like all this real estate stuff, it's not like tax loopholes, it's like directions to pay less taxes because they want you to put money in there. They want to incentivize people to do that. So I just followed what they tell me to do and not pay any taxes, or barely any. What else is important here? Oh, so we're talking about that graph of like how there's always new multifamilies coming up online. So they're quoting here that an aging population, increasing divorce rates, and more younger people living at home contribute to strong demand overall. And total housing production is unlikely to catch up with household formation. Even though new stuff is coming online, there's a housing shortage, and I think that's true in Hawaii too, right?
Affordable housing shortage for sure.
GDP growth and consumer confidence index, so all-time high in terms of confidence index. I call that a vanity metric. I don't know if that means, and how does that mean, right? Confidence index. GDP growth is the important one, I think, here, and it's been positive for multiple months. And here they're saying that in Q4 they're forecasting 1.1 positive. What's the recession? Two consecutive negative, two consecutive quarters or something like that?
I think it's 2 seconds. Yeah, negative GP. I think it's.
Yeah. So we talked about the oil. Here it is in graphical form. What's happening? This transition happened around 2015. Is that when the F word started to become a big thing? I think so, right? Because I remember when I was working for the railroad, coal was a big thing from 2000 and when did I graduate? 2007, 2000. I think 2010 was when coal was really big. Everybody was saying everything about the Powder River Basin and Wyoming. Cleanest burning coal forever, right?
Oh, yeah.
That was what they said. And it was cleaner coal burn. And because it didn't go in the mines, you didn't have to mine it. It was just like excavated off the top.
So you don't got to worry about the black lung.
Yeah, you don't have to worry about that. But then that went away a couple years later. The F word started to come. So that makes sense.
Yeah, timing.
Anybody do short-term rentals in here? Yeah. I don't do it.
Just don't turn around and face that way, that's all.
Yeah, I don't do it. And here's why. Here's another article that came out from Newsweek. So Airbnb is banning open invite parties and events.
Yeah,
no party houses. I've done this a couple times.
Did they have deaths or something? Was it?
Probably had party house.
Yeah, I thought they had like a couple of deaths at that because they did that thing. So that's what triggered this ban.
Oh, okay. Oh, someone's always got to ruin it for everybody.
Can I ask a side question?
Yeah.
So on Saturday and Sunday when I drive up and down like Olive Line, I see all these for sale open houses. Has that like an influx of housing for sale because of the Airbnb ban changed? And have those houses that were Airbnbs, are they getting sold in that 30-day longer?
That's captured. That's definitely captured. And I believe you're probably seeing, anecdotally, we'll say that I think that's probably
That's the word.
Yeah.
Anecdotally. There was a guy like 1 month or 2 months ago that sat back there and he was like saying, yeah, he does short-term rentals and he sees a lot of people unloading their stuff.
Yeah, and we were talking about, I think, the other part of like the windward side of the island. We had a discussion about how there are a lot of people on the windward side that were doing short-term rentals, and after the law passed, now anecdotally we're seeing a little bit of a bump on that side in terms of for sale, and then coincidentally or not, they're multiplexes or.
Yeah, because I was like, there's so many open houses. Like, it's weird.
Yeah.
It was like, I almost didn't know which one to pull up to because it's like one every block. And then like all this bulk trash is on the side of the road. And I'm like, well, should I go up in here and check it out? But then I was like, I don't even know which one to pull up to.
So the answer is, you know what you have to do is you have to figure out how to build a monster house and just do long-term rental in the monster house.
Oh, no.
I'm totally joking.
Yeah. So here's another great news article: 5 markets with the greatest rent loss. Number 2, Honolulu. Out of the whole nation, Honolulu lost 1.7% rents. It's about time. Doesn't make sense to buy properties here. Right? Well, I mean, why did the rents go down? I mean, I know it's good conversation, right? And normally Hawaii, from November to November, so it's not like a cyclical, like a 1 month change.
I saw in the news it was because of the Airbnb.
But this is rents. So notice a lot of my data is rents.
Right, that would make sense
Yeah.
though, because if everyone is turning their Airbnb into
Back to long-term rentals. You have more inventory.
now more supply, right?
What is the, like? Do you know like the out of the Airbnbs? Is it like 5% or is it like 0.01%
Of all
of
rentals.
all
That I'm
inventory?
not sure.
Like I don't feel like it even is a drop in the bucket.
I mean, I know 2 people that had Airbnbs and they're gonna put them up for long-term.
But this is also a very self-selecting group of real estate investors, not at home right now. I don't know. I mean, got me.
Could be a blip. Could be a blip too.
Yeah.
At 1.7, could be a blip.
I don't know. But it is what it is, right? I mean, maybe I should ask my my landlord for a little bit of a decrease. I don't buy houses to live in. I don't think it makes sense. I wrote a really long article about it because I would rather buy to invest. I like buying real estate.
It's like Grant Cardone.
Dean will help you buy houses here to rent. That's what you want. Is anybody interested in what the syndications, private placements, this stuff? So this might be interesting to you.
We mentioned this last time, right?
So this actually came out in the news where, so like there's a difference between accredited investors and non-accredited investors. So accredited investors, their net worth is higher than $1 million, not including primary residence. And you have to have a net or income of $250,000 a year. You have to be pretty well.
200 if you're single, 300 if you're married.
Yeah. So it's always been an issue for non-accredited investors to get into these country club deals because they're not accredited. So now the SEC is looking at changing the laws where they're like, well, you can test into getting accredited status even though you're not accredited. So I think what they're kind of working on is like there's a Series 7 or 65 brokers exam that you can test to do it.
Oh, you have to test.
Well, they haven't figured it out, but that's the kind of what, when I read between the lines and other stories I piece together, that's what they're trying to do.
That's interesting.
But I don't know what the whole issue about being accredited, I don't know why it's so important. 90 to 97% of private placements are for non-accredited investors.
Just a number?
Yeah, I mean, you can go to the SEC website, go on the EGR database, pull the data, and most of the deals are 506B exemption deals.
So that means they're sophisticated?
You just need to be sophisticated with a pre-existing relationship with the sponsor.
So is that reducing the threshold or the requirements for sophisticated, basically?
There's nothing. Nobody has
Or
really.
it's just defining it better?
It's just defining accredited.
Oh.
Has nothing to do
Oh,
with
that's right, I'm
sophisticated.
sorry.
Yeah.
So you think it's going to open up a lot of money per se? I mean, like how crowdfunding changed, right? And now there's more people available to crowdfund.
I think if you're sophisticated and you're not accredited yet, you'll find a way to get into deals. And this could be another way to do it. So on my website, simplepassivecashflow.com, I write articles. This is all I do these days. First article is transitioning to syndications and other limited partner tips webinar on there. And the other one was infinite banking with whole life insurance for 2020. New deal. I created a new deal portal.
For new investors.
Yeah, and the 2020 goals launch. So the stuff we're doing live here, I have a webinar I did with my online group too. But I read this book recently. Anybody read this one? He says the F word a lot.
It's a Navy SEAL guy, right?
Yeah, so the president, David Goggins is his name. He used to be like he used to get abused as a kid. It's like the first chapter is like kind of jarring, I guess. Like he got abused. He would like wet his bed like every night. It was like kind of one of those circumstances. And he was just like a loser for a while. And then he started to run these ultra marathons. He went to Buds 3 times. So just like mental toughness, he's like the guy. Very, I don't know, if you're interested in that, making a change, I would recommend checking out a few of his podcasts. I think you have to find somebody who you resonate with best. Like he might be too much, like too hard.
One side of the spectrum.
Yeah, you got to find someone. Like he's a little too hard for me. It's like, you got to find someone you resonate with. But I think that's it, right? So all this stuff, we edit these webinars down. We put it on the YouTube channel. But you guys can find that at raaloha.com. But any questions about anything?
Or topics you
Any topics you guys
Do you
want to
have
talk about?
to be an accredited investor to do syndication? There for some syndication, not all, or?
So there's 506B and 506C deals for the most part, right? C deals, 506C deals like CAT, they can mass market it out into the public. So I think when you can do that, the government's like, right, you can mass market it and put it on the radio, put it on a podcast, put it on like social media, but we're not going to allow you to take non-accredited investors.
Okay.
And when you do take your investors that are accredited, we need to do a third-party certification on them. So to answer your question, you can be non-accredited invest, but you have to be it has to not be a 506C deal. And like I said, like 90 to 97%, the vast majority are 506B deals that aren't mass marketed.
I'm sorry, what's the exact definition of syndication, which is a big deal, or?
No, syndication, you can syndicate something small, you can syndicate anything big.
Like a giant hui.
Yeah.
But it's regulated by SEC. Like how the SEC regulates stocks and bonds. There's a just different code regulation for these types of investment facilities.
Are you accredited investor?
I am.
Okay, is there like, I guess like sometimes I go to meetups, I don't know if that's like a rude thing to ask, or any other certain,
I don't think so. Say it.
like, because if you're at a different level, it's like hard to get like, okay, well, I want to work, I want to get there, but.
I mean, etiquette wise, I think, especially in Hawaii, I notice it's a taboo thing. But when I go to the mainland to my things, I go to paid stuff, right? So people are like higher net worth, they're mostly accredited. Most of them are like have this business card and they'll give it to each other and have their net worth, liquidity, how many properties they own,
That's trippy.
and their phone number. Like it's crazy, right? Like here in Hawaii, it's different. Like you said you're from the mainland, right? So you get it. It's a little bit different here.
What part of Missouri? It's funny because as Lena was saying, I invested in Kansas City. Both,
Yeah, I heard a lot of people do it.
it's kind of like the Indianapolis. You're talking about the secondary markets and
I got a mobile home park halfway between Kansas City and St. Louis.
what town is that?
Moberly. Good. It exists. Does that kind of answer your question? I don't know. We can talk offline about that. Like, to me, there's an etiquette. You don't want to.
That's a good point.
You don't want to
especially in
shoot from the
Hawaii.
hip. Right? Like I have an accredited investor group that's kind of a little hush hush and it's a little quieter. There, it's a pre-selected group of people, and that's to me, it's cool in there to kind of talk about personal finances. But I mean, let's face it, here you guys don't know each other, so a little different.
Any other questions?
Do you have mobile homes as well as rentals, like you rent the apartments? I was curious your thoughts on mobile home rentals for people that are starting into this market. Good, they're a good alternative, trying to see
Mobile home parks.
parks is more of a.
So you're talking about just investing as a passive or investing in?
Like if someone wants to get on the passive ladder, I've gone to a couple other events, mobile home millionaire.
Yeah.
You know, I know she has parks as well, so it's obviously a large area.
So from an operator standpoint, I think operating them is harder than apartments. But from an LP perspective, I mean, just throwing money here and there, right? To me, how I've done it is I don't know nearly as much as I know about apartments and mobile home parks, but I find the other investors that I trust that don't have a dog in fight that have invested in other people's deals that do mobile home parks.
Is there the tax benefit, the bonus depreciation?
Oh yeah, it's all the same.
It's all the same. It's not just the underlying land. There's
Yeah.
improvements attached. Oh, okay.
I haven't really seen it like in real life with the K1 yet.
Well, I just did. I thought because I've also heard about mobile park.
Yeah, but I
Investing in
think the
assets.
question was like, which one is harder to invest in the
Oh.
LP? Is that like to do due diligence and
No, I just wanted your thoughts on, it's I guess I feel like it's a relatively new area of investment for some people, or that it's,
Yeah.
just houses or rentals.
it's just like how we talk about like, oh, everybody was investing in Kansas City before and Indianapolis. Now you can't do that, right? Everybody was investing in apartments before. Now you can't do it. You got to move off to you got to get off the beaten path, and mobile home parks are that.
And that type of investment is gonna move differently with a correction and a change in economy too, right?
Right.
Because theoretically, that's like you're hedging against a downturn because theoretically it'll be stronger, even
Right.
stronger in terms of your tenant occupancy rates and stuff for that type of investment.
And one thing I talk to other more sophisticated investors, higher net worth, they diversify over different asset classes. Because you don't know, like apartments and mobile and rental properties, like it's 80% of my portfolio. Partially because I know it the best, right? I don't have any stocks. I got given that up a long time ago. But like you never know if like the government's going to build some government subsidized Class B housing, right? No private entity is going to build BC class. That just doesn't make sense, and that's why I invest in BC class, right? But you never know, right? The government, I think that's how like Asia does it, right? Like they build like older stuff or like budget, or I don't know what the word is.
You mean in the more socialistic kind of countries?
Yeah. But that's the nice thing about mobile home parks. They're never going to build new ones. Number one, they don't make any money for the municipality, and number two, they're eyesore. It's political. The mayor permits one, or the government permits one, everyone gets all upset.
Not in my backyard.
Yeah, not in my backyard. So. Yeah, I mean, I think you gotta like learn it one by one. Like to me, like self-storage, I've never invested in self-storage yet. I recognize it could be good, but I'm just gonna learn one thing at a time and move on. And then let my strategies, let my network grow my network, and hopefully they know something more about self-storage.
So when you say that, that means that they come to you and say, I have something that I'm interested in $100,000 or whatever. Is that what you mean exactly? That's not like a solicitation.
I mean, I guess the way I do it is like I look for operators and syndicators, and then I figure out who do they know of my network, and then I go, "Hey, Dean, did you work with these guys before? Do you invest?" That's how I do it. And maybe I call this investing by proxy. And my first deal as an LP, I lost like 40 grand doing this because the person I asked just happened to be like a self-directed IRA company. And looking back on
Which
it,
wasn't me, by the way.
yeah,
Just pointing to me.
yeah, some guy,
Yeah.
some guy. And then looking back on it, I was like, what the heck was I doing? I didn't know. Like, they were illegitimate, like, referral source.
Right. So you really gotta trust.
Yeah, build relationships. That's why we do these like things like this. But build relationships with the right people that actually know what you're doing and actually invest in. That's the key.
And the ones that are in line with what your goals and your strategies are.
Cool. Any others?
Why did you stop investing in, you said you stopped investing in stocks a long time ago?
Numbers don't lie. I make a lot more money doing real estate deals. You can control the asset.
It's tangible, is that way?
Yeah, it's tangible, it's real, but just straight up numbers. I probably could make 3 times as much, not even including any of the tax benefits. I mean, which is ultimately why I think 401ks and mutual funds are what robbing everybody in America of their retirement. Right?
Other good benefits of real estate too. Yeah. Leveraging, right? Get debt on it. Leveraging it, I think, is really good, and the tax benefits is another. It's a lot more fluid in terms of tax benefits versus. Yeah.
Some people I talk to, like they want to have half real estate, half stocks, and that's cool, you know.
Yeah, that's what I do.
Yeah.
Or not half, but it's.
But why don't you go all in with real estate? I mean, you obviously know how to do it. You have deal flow. You have.
Yeah. Slowly, I'm slowly transitioning things over.
Yeah.
But at the end of the day, I mean, I like a diversification. So
yeah.
And I call me old school or whatever. Just I guess growing up as a CPA and accountant, it was always stocks for me. So, So for me, it's hard to get out of that, but I totally see the benefits. So now I'm slowly moving things over, and even things that I had stock portfolio in before, like you mentioned, self-directed IRA. I couldn't fully get out of stocks or into real estate